Good morning, chaps. How are you doing? Ladies and gentlemen, good morning. Join me this morning to talk about if God is real. Are we yes or no for abortion? No, we're gonna keep it light this morning, chaps. Definitely, I'm not getting into any of that vaccination stuff again from yesterday. But welcome to this morning, right? My account is down. It went down with Facebook, and WhatsApp is my explanation for it. But it was one of them days. I hit it twice and it just didn't go for me. So it's like, in trading you take 2 steps back and then hope to take 4 steps forward again. But it's one of them. I should have known better really, but the setups were valid. It was part of my strategy. Just didn't work out, and this can happen. Vaccine Vinny, let's not even talk about vaccines. Seriously. I mean, it's all good fun though. Some people messaged me yesterday, said, "Oh, it was funny," because people, once you start getting into them discussions, everybody's got their own opinion, aren't they? But we'll just try and keep it about trading. But you can't sort of help sometimes to wander off, can you? And sort of, like the current events of what's going on in the world, because trading. It doesn't take a lot to sort of analyse a market and talk about a market. So I just try and let the group or whoever's in the room sort of go wherever they want. But yes, we just won't get into it. We'll talk about abortion again one day or something. I don't know. But each to their own, guys. Hope you all had a good day, a better day than me. I'll tell you what I was thinking. I was thinking that DAX is going to go down, and it didn't, basically. Fucking DAX. It pisses me off so much. It really does. Let me just show you. I was in here short twice. Fucking bastard. Sorry for the language, but it does piss me off, this does, because I was pretty positive. You can obviously see, whether it's getting held up or not, I think it is getting held up, but that's just me. I'm short in here, by the way. Let me just zoom in so you can see. In this area, I am short, and I am thinking that this is going to crack off down here. Got stopped out. My stop was above this high here. Perfectly correct stop. But then it goes again, doesn't it? And I'm thinking to myself, right, okay, now it's going to go. And I'm going to get left holding the bag of shit with a stop, and now it's going to go. All the US markets look like they were going to go. We're above balance. I like this little consolidation. They were valid entries, both of them. I took them both and got stopped. So at the end of the day, it is what it is. Hopefully I will be back to profits again sooner rather than later, but it is just one of them. As you can see again, we've opened up smack bang in the middle of yesterday's sort of balance area, as you can see. So that's Friday. Sorry, let me just go and find it. Where is it? Here. So this is yesterday's low of the balance and yesterday's top of balance. Let's just draw it in. I think it was that high there, wasn't it? That was the top. Yeah. So that's yesterday's balance here, and we've just opened up with a balance that's inside the prior day's balance, which is always. I'm not saying it could actually happen like this, because don't take my sort of. I do everything on probabilities, but if we open up with a balance inside the prior day's balance, then especially on a Tuesday, it tends to be that we have sorry for swearing again. It tends to be that we have a really sort of consolidation tight day. So I will need the setup today to be absolutely spot on to risk any more money. Because for me, if we're opening up with a balance inside the prior day's balance, it tends to be, on a Tuesday especially, I find that I can lose money on them days. Like Tuesday's one of my worst days for trading, by the way, my system. Tuesday's a bad one for me. I don't ever seem to make much money on a Tuesday. A lot of my big wins tend to be on a Monday and a Friday and a Thursday. Tuesday and Wednesdays are a bit shit. So today I have to be super careful with my execution, because obviously I don't just want to hand money back for the sake of it. If we do get a setup that is absolutely sort of pinpoint perfection, and we get the exact pullback that I'm looking for and then the breakout, I will still take it. But I just need to see certain criteria to be hit before I will risk any money today, because I don't know why that is. It tends to be that on a Tuesday, I've found that when you get the big moves on the Friday and the Monday that I'm sort of after from my strategy. Now, you do get the odd good Tuesday. This is what kept me out of last Tuesday, which was a good day. Tuesdays for me tend to be where I don't make any money on them. The market just seems to consolidate after a Monday move or a Friday Monday move, and then the Tuesday tends to just, especially if we get the balance inside balance. So it's just something to note, but don't trade off it. Just keep an eye on it, because we could have a tight day this morning. Wasn't there a long around 15150 ledge, 145? Not for me, Matt. No, there wasn't. I can see what you're thinking, but there wasn't for me. I didn't get my entry. My entries are, I have to see certain things to be met. Now, I didn't get a convincing close yesterday through any structural high. So I don't just take the second break of balance. I know what you're saying, because everybody always says it to me, like, why were you not in the market here? Or why did you not get an entry? I think that's your strategy, but it's not. Now, you can clearly see here, can't you, that once we've gone out of balance and pull back in, you'll be thinking that around 145 in this area, right? I was thinking about getting long. Now, I know for a fact that the second breakout of balance is a decent entry, but I've found if you waited for the next move out of balance, I as I've said to you, I like to trade the second leg out of balance and then wait for a pullback and then wait for a close for a structural high. We didn't get one. So as you can see in this leg, let's just zoom in so you can see exactly what I was thinking. Because somebody else sent me this exactly the same question yesterday, a different person, by the way. And they were saying that this could have been a long here. But I like to, if we would have closed through this high here, this high, with a thick green candle, I would have taken the long. But you can see that we didn't get the close through that high. But then we make another spike high, which is another trap, and we never close through there. If this green candle would have closed through that trap high, then I know that all the shorts in here have been taken out of the market. They're all wrong because we've closed through their high. Do you understand? Like, that's how I think. So it's not as, like, I'm always looking at who's trapped, where are they trapped, have we taken their stop, if so. Because I look at it like, if this is a bull trap, if this is a bull trap here, and everybody who's long has been trapped, then obviously what should happen is these people who've brought here, their stops are probably here and here. So if this guy's right and this guy's right, that means that all of these people here are going to get stopped out who are long. The only context that I could offer is if this guy's wrong, we're going to get a close through. If we're going to get a close through this trap, aren't we? We're going to take that trap out. If we take that trap out there with a thick green candle, then I would look at it like the context, we're above balance, there is a failed bull trap, which this would be the candle that had failed, which means we would have closed through it with a bullish candle. Now, I would imagine then that all of these people who were selling in here and in here are then going to start getting out of their positions, which is then going to make us go higher. Do you understand? So I'm always looking for where's the trap, who's trapped, who's in control. And for me, when we never got like the close through this level here, I'm thinking to myself, all right, okay, well, and especially with this candle here when it finished, I'm thinking, right, this thing's toast. Whoever's been buying in here, they're going to get washed out. So it's not as simple as just trading the second leg out of balance. I'm always then looking, because also, as well, if let's just look at it like this is something that I try and get through to people. If you're trading the second leg out of balance here, right, your stop's got to go beneath there, hasn't it? So if you're trading the second leg out, let's say you went long there, when we closed, the first close out of balance is at 145. Your entry would have been at 156, but your stop would have had to go below 100. Now that's a big stop, isn't it, to try and make some money on. So what I would prefer to do is wait for the market to coil again in one of these sort of I call them like traps. Take out this candle here, and then my stop would go beneath this point here. And normally, the gap, the stop distance from your entry to your stop will be smaller, which means when the move gets going, you make more money, more R on your position. But this entry here is okay. I call it a second leg out of balance entry rather than part of my strategy. You can take this entry. You do end up with a pretty big stop, and it's a lot more difficult to make more R when the market actually goes. But that's what I would do. I mean, for me, I'm always looking at who's in control of the market. And yesterday, I didn't get a convincing close through any areas. In here, on the other side, if I talk you through this, I'm thinking to myself, right, these guys, so it's the other way around now. Reverse the thinking from yesterday, it's now the other way around. We've gone through the bottom of balance, yeah? These guys here, I call this like, this could be a bear trap. So anybody that's sold in here, these three bullish candles that take us back inside balance, I'm thinking to myself, right, okay, if this carries on, then these guys here who've been selling are going to get stopped out. But it didn't. And it started looking to me like the people who'd brought this swing low here, they were going to get stopped out, right? Because why? Well, because they failed to keep us out inside balance. If this would have carried on and driven up inside balance, then I would say that whoever's brought in this area here is in control of the market, because they pushed us back inside balance and held us there. But what happened was we got this candle that closes back outside balance, and then in this sequence here I got short, thinking that these guys here, they were going to get stopped out and we were going to go and seek their stops, which would have meant that they would have had to get out their positions and we would have chased lower. But it didn't happen. And this happens sometimes with my strategy. You know, like I can get these type of days where I'll lose 2 on a row, but I have to take them because at no point do I know if I'm going to be proved right or wrong. The same happens again. We get this spike up, which stopped me out above this high, but then guess what happens again? We get this nice big momentum candle closing back through balance, meaning, right, we're going to get it now. Someone means business, like they're selling. These guys here are going to get stopped out. These guys here are going to get stopped out. Their stops will be beneath this low. I think we're going to rotate through that low, and I think we're going to go lower. And then again, the volatility just dried up here. Last night I was at a football meeting. Football meeting started at 7. I had to go to Cheshire FA for the league meeting for my team. The Wi-Fi is down, all of the social media is down. For some reason my 4G signal wasn't working, and then I looked at it. I think the meeting finished at about 8:15, something like that. And at that point I'd just been stopped out above that high. Would I have changed anything? Probably not. Would I have got out of my position early? I probably wouldn't have, so I can't really lie and make up that I would have done anything that I wouldn't have. I would have definitely taken 2 losers, so it is what it is, I'm afraid. Just going to have to suck it up and get on with it. But this is what happens as traders, doesn't it? You can often take a couple of steps forward and 1 step back. It just sucks when you do it. So I hope I've explained that to you, Matt. What I have got to do today, though, guys, is I have got to keep it short this morning. I've got other stuff that I've got to do this morning. Now, I will have my MacBook Pro and my phone on, but I've got to just do a few errands and stuff like that. So I won't be on here for massive amount of time. I'll probably keep this to be my shortest one, if that's okay with you. Right, where are we now? 8:59. Is this? This would be an entry here for me. My stop's going to have to go above there. This is an absolute perfect entry. I'm not trying to just steam into something, but it is. Hey, up 60 quid. Selling the lows though. 0.60. I think I might have to wait for some more risk reward on that. It's like 90 pip stop. Now I'm going to leave it. Stop's huge. I have to wait for a pullback. We have already been out of balance, and then we've just broken some lows. So for me, that would be an entry. But the stop's huge, absolutely massive. So when the stop's huge like that, it's no good. I would prefer to then wait for another leg and then a consolidation and then take it lower. It just doesn't look right to me, that. with the huge stop. It's going to be tough. Could it just steam 1,000 points down? Obviously, yes, but I'm hoping that it'll pull back if it does stay lower. My stop would have to be above 106, and the entry would have been like 17s. It's a huge stop, that is. It's going to mean like I've got like 60 pence on per point, so I'll give it a miss. So you're in short, are you, Liam? Right, Liam's in short. Good stuff, right? Good lad. I can see what you're thinking, Liam. That was an entry for me. That was. I don't know. I think you probably trade pretty similar to me, but that was an entry to me. That. The problem that I've got is my stop's huge. Huge. That's like the biggest stop I would have had for a right good while. 100 tick stop. Times like that, I will wait for the second entry if we get one, and try and get a tighter risk reward on it, so that if it does go my way, you've got way more chance of obviously getting decent R on it. My stats suggest DAX opening range breakout moves provide much more R on the first of the month compared to the last of the month, and day after NFP and FOMC compared to morning of NFP and FOMC. You know what though? That's what you get from having good stats, Nick. That's awesome. You know, you want to trade in the most profitable day types, don't you? Basically, so that's fantastic. You really should look into that. What's your ideal stop? For me, Dave, it's like 35 ticks. I have an ideal stop and yeah, less potential R, Nick, that's what it is. I have an ideal stop and an ideal time. Probably a little bit too early for me as well to get into it. My most profitable time is in between like 10:45 and 1:30 to make an entry, and my most profitable stop is around 35 ticks. Average is like, once you go above 70, it becomes difficult to make any R. Have a look what he's saying. Let me just go to this dealing box. Yeah, I just moved it. Sorry, pal. When I was trying to take that trade, I was just looking at. I just moved it slightly out the way so I could see what was going on with that candle close. That's better. That's your IB low now. It's tough though. It's a tough one. That was an entry, but same as say, you know, you're in control of your own account, aren't you? You've got to be in control of it. I know for a fact that once I go above 70, 75 ticks with a stop, I don't really make. I'm in the market, and then the market sort of, they're not. You know, there's no big stops. How can I put it without sounding like an idiot? On the days when you get a big stop, you tend to not be stopped out. Like, you know, it's a profitable entry to use a big stop, but the chances of you actually making decent R on the day are greatly diminished. Can the market steam 500 or 600 points down this morning? Definitely, yes, it can. But I would have to say that if it does that, I will then get an entry further down, won't I, with a tighter stop? I would hope. So yeah, once it goes over 75 to 80 ticks for a stop for me, I tend to not take them. It's too big. Like, can you make money with 60 pence a point on the DAX? You can definitely make money, but can you make the money that's, you know, that you, and what tends to happen is you can have a really big moving day, and you can be in the market all day and get your entry right, but at the end of the day, because you've had to use such a big stop, you've not made any money. And I always think trading's about making money. So for me, it's all about making money. Can I make money with a 100 tick stop in the DAX at 60 pence a point? Probably I can, but can I make enough money to obviously, capitalise on that day's movements? Probably not. So it's like, you have to weigh it all up for me. It's tough. If that makes sense to anybody. But I know I'm not alone out there, guys. I've had a few people message me this morning and last night who said that they're underwater this week and over at the end of last week. So I don't think we're alone out there if you've had a bad couple of days or a bad week. It's just how it goes. It really is. You've got to just... these are the times that test you, basically. It's all good when you're making money. It's when you start going into drawdown. But do you know what feels good about drawdown? Coming out of drawdown. That's what feels good about drawdown. It's like when you played football and you've got beat, and then you've got beat, and you've got beat, and then you have a great win against the team, and it always feels so good. Morning everybody. Morning Ed. Making us for a Subway. Is that what your goal is today, dude? Yeah, well, the thing is though, Ed, steaming into a move, if your strategy says that you need to be short, you really should be short. But for me, I know for a fact that once my stop goes above 75 or 80, it tends to mean that I won't make any money at the end of the day. So, or I make very little. And a lot of the time, if it does go down, like say for instance, my entry would have been short this morning. If it drops this morning, highly probable you get a pullback of some sort. You know, with a smaller consolidation, where you can put your stop somewhere, and you will make more than if it carries on than you will have done if you just would have taken the original entry. Kurt, enter the market as close as possible when you were wrong. Right, so that's one of Tom's sayings, that is. I don't agree with that. Tom trades different than me though, but what he will say is, try to enter the market as close as possible as where you are wrong. But normally, at the closest point to where I am wrong, if the market gets to that point, I will get stopped out. You know what I mean? There's a lot of them trading sort of quotes and platitudes that can mean something to a lot of people, but mean nothing to lots of others. So I get where Tom's coming from with it. It's a good saying for how he trades. But for me, it doesn't really work like that. I make money when the market tells me that it's it's further away from balance. So like you could drill that down and say, right, okay, so I want to try and trade as close to balance as possible then, because once we get back into balance, I'm wrong. But the days that I try and trade as close to balance, well, you know, like they're the days that normally the market is going back into balance. Do you understand? So for me, it doesn't really make sense to me. That doesn't. I know what you're saying completely, and I agree with the quote if you trade that way. But for me, it just doesn't. It's not part of what I would say to try and be doing. I know what he's getting at though. I completely get the statement. And the problem with that is that when you're trading a breakout or a momentum strategy like me, is you won't get chance. You don't get chance. Like last Friday, right? The day that I was on the other day when I was on the phone, I missed that entry. My strategy doesn't give you a chance. It just, when it goes, it just goes. It doesn't give you a chance to once the consolidation and the pullbacks happened, you won't know that the market's going to break out until it actually starts showing momentum. At that point, if you're not on it, you're not on it. It's gone without you, and that would always be trading away from that rather than to it. If you understand. Morning, Change. How you doing? How you doing, pal? You alright? I've seen the tweet this morning, mate. I will tweet you back in a second. As soon as this is done, this live stream. What we're going to do here now, it looks like we're going to close back into balance here, doesn't it? It's one of them. It's the old fake low and go. It's interesting. Let's have a look at what it's doing on the shorter time frames. Oh, look at that pin bar there off the bottom of balance. Is that going to mean continuation lower? It could do. There's your 8 AM low. So we'll just move on the 1 minute time frame. We always move through a 1 minute balance. Can you see that? We've pushed through. We've gone up and pinned that high. Lovely pin bar there. Your entry would have been at 39. Stop would have been at 48. 9-point stop. Aiming for these lows here. Tasty little trade that is. Let's see what happens. See if they get paid. See how I would be looking at this now is all these guys here who brought this. They're wrong. Their stops are beneath here, and that would be my first point of take profit. Just have a look how it plays out. Looks like a nice setup, that does. Though you would have to say that that's technically perfect, wouldn't you? You know, there's nothing in that setup there which would say to me that this shouldn't carry on and continue here. It looks really good. I would say that that would be like an A-star setup for me if I was trading my short time frame stuff. Like that for me would be how I would define as a really good looking setup. You know, we've had the move out of balance, which was decent. You know, looked quite like it was like a clean break through these lows. We've gone back up and retested it, but with like a very sort of weak looking leg. Then we've pinned through it. And then I would be thinking we'd get a continuation and take these lows out. So from a technical point, I think that setup's perfect. Watch everybody get stopped out now. But it looked really good. Can you see that? Just finished 7 night shift in a row. Wow, Change. Good lad. What did you do, mate? What did you actually do for your job? Night shifts are tough. I take my hat off to you. I really do. Especially 7 in a row. Evening we will go. So the Aussie boys are in then. Have a look at that. They're going to get stopped out, aren't they? You see, this is the thing now, right? If you're in this trade here, who's watching the screen, right? If you're in this trade and you've taken this trade, let me know how you guys trade, right? So we've gone through balance and I've just said that I would be short there at this point. Would you have moved your stop down? Would you be getting out of this now, or would you hold your stop? If your stop's above this high, what do you guys do? Would you be pressing get out now as you think it's coming up to take your stop? Would you be letting it stop you out, the market? Let me know what like most of the people do if you could put onto the stream. Are you one of these guys that once you see this pressure on this candle, you'd be straight out of it? Or, you know, do you hold your stop above and think, right, if it stops me out, it stops me out. I don't touch it. I leave it. Because after this candle here, I would be thinking to myself, right, I need to bail on this. I'm going to get out. And as you can see, I would have been stopped out there above that high. Like, what would you guys do? It's one of them where sometimes, like I would have just seen then, I would have pressed get out. But then half the time, you know, it rolls over and does what you would have thought. Are you likely to mess with your stop? Are you likely to get out of the market and bail before your stops hit? Like, what are you doing? Data center facilities for a bank. Right, Change. Awesome. You getting well paid, Change. I hope so. Bringing them Aussie dollars in. Stacks and stacks and stacks. Good lad if you are. You would wait for the close below the lows now and stops above the high of these candles around 9:10. I'd be looking to get out of that now. Right, okay, so you'd be getting out. I'd leave it and follow your exit signal. Right, okay, so it's a tough one, isn't it? Because you could clearly see that the pressure was on then. They'd reverse that in this area here. And I often find that once you get back inside this pin bar, so I would be looking at this pin bar here. If I traded how I traded before, is once we've got back inside this pin bar, the body of it, and we haven't seen another rejection lower, I'd probably be looking at bailing as soon as possible. You can save yourself a lot of odds, but this, you know, then you open up the discretionary side of entering and exiting the market, don't you? And it becomes tough to sort of stay on top of all of your results and stuff, because if you're making discretionary decisions if you are using it as like a mechanical based system, you sort of go into that doom loop again, don't you? And there'll be times here where it does just go back up but then rolls over. You think to yourself, would you enter again then? You could enter again possibly. Then it can skew your risk reward. So sometimes I do think it's best to leave it like Kurt and just let let it play out. Let the market do its thing. Let the probability, play out, and not try and play with the inputs and outputs of it, trying to think that you're saving yourself money. Because I've done that so many times in the past, though, right, where I thought I was saving myself money. Let me just get rid of this. And on this candle here, I've bailed. And then what happens? You know, the old Murphy's Law. You get out here thinking, right, I've saved myself half an hour from my entry. I've saved half an hour. And then it rolls over in one horrible big red candle. You don't get back in because it happens too fast, and it just pukes, and you go to target. I just think you have to do whatever you're comfortable with, and if you're more comfortable with getting out and saving the half an hour, and take into account that it could possibly roll over, and you'd be fine with that anyway. If you don't get back on board, it's whatever suits your personality, I think, at that point. But it's interesting. It's interesting to see how everybody trades differently. Morning, Cade. What are some of the basic stats that you look for when testing the IB strategy? Cade, right, so I don't use the IB as a perfect breakout for my strategy, right? So I don't know. My strategy is slightly different than just trading the breakout of an IB. The only thing that I look at with an IB is the size of it, and I trade long above it and short below it, and then trying to include the size of it to give me the days when you're going to expect expansion, or the days when you're likely to not see expansion because the balance is huge and there's no context to it. So I don't actually trade a breakout of IB. I just record the size of it, basically, pal. My strategy is slightly different. I try and take the second leg out of it, but only get into the market if a structural high has been taken, and like a trap is set up, where the people who've set the trap up are likely to be trapped. It's a bit of a mouthful, but I think about it like that. So if there's a trap setting up at the high of day, and these people think that the market's going to come back into balance, then I will be looking to see if the trappers get trapped. Okay, and how will I know that? Well, if we trade through the area where their stops are likely to be, with momentum, it's highly likely that is, we're going to expand from that point. Why? Because the people who are trying to hold the market in or hold the market down, if you're trading a trap long, they've been taken out. So that it's just little things like that I look for, basically. Now I do have an indicator, a mechanical indicator, which sort of gives me the entry, but I have to see the trap set up as well at the same time. So it would be like a breakout of balance, somebody trying to get short setting up a bull trap. So if you're long, this is the three things might be more than three, so let's just get into it. 1, we need a tight balance. 2, we need a leg out of balance. 3, we need a pullback. But in that pullback, I need to see somebody who's stepping into the market and selling the market who thinks that they're going to trap some bulls, right? I then need to see the person who's trying to, or person or firm or people, whoever it may be, who's selling the market at that point. I then need to see them look like they're the ones that are going to be trapped. Do you understand? So every day when we break out of balance, we will normally get people that'll step in. If we break out to the upside, we'll normally get people who will step in and try and sell it and try and, I call them reversal traders. So we're thinking the opposite to them. We're thinking that we're only going to make money when the market expands, aren't we? We don't trade reversals, we trade expansion. But when you get a move out of balance, a lot of the time, unless it's an open drive, when you get just a leg out of balance, a lot of the time, you normally get the move back into balance. I call it a pullback, but a lot of the time, the sellers come into the market and they're trying to move the market back into balance. They're reversal traders. That's what their strategy is. That's just what they're trying to do with the market. Now, I need to see somebody in that sequence look like they're going to get trapped and the market sort of does it by taking their liquidity out, and you get a solid close above their liquidity, and then that means that they're gone. You know, like, are they going to step back in and sell it again? Probably not. Why? Well, because the market looks like it's expanding now. Do you understand? That's how I see it. So that's why my entries, when people are looking at my entries, they might not be able to work out like why I haven't entered the market or why I have entered the market, or like somebody pointed out at 145 yesterday, was that not an entry? I just didn't see that, basically. And I haven't got some holy grail or anything like that. I haven't got some holy grail book of entries and exits. I haven't. I just try and put the odds, the probability of us actually expanding, try and make them as much in my favour as possible. Basically, and I don't use order book. I haven't got Delta, I haven't got anything like that, or a DOM up where I can see it, but you can just get a feel for it if you've watched the DAX for long enough. You can just get a feel for it, and you can sort of feel it. The things that I look at though are pace of the market, pace. If the market's got no pace, I ain't interested in it, because it means that somebody's not really that bothered about. I look at it like any auction, right? You go to a car auction. I'm always talking about cars because I used to be a car trader, but go to a car auction, the pace of the auction, if there's buyers in the market on that day, the pace of the auction is fast. People want them, like the cars, like the auctioneer, they can't get them fast enough. The pace is there, the buyers are in, or the sellers are in the reverse of the market. There needs to be pace. Like the people that get taken out of the market in the trap, and I'll show you yesterday a perfect example of it at 145. There was just no pace. So I'm looking at this point here and thinking, right, okay, well, once we break out of balance, we just there's just nothing there. Like this candle here at 230, if that was a close through this level here with pace and it went for it, I would have put my stop underneath here, and I would be trading that long. Now, I haven't got any holy grail or anything like that. I would just be my best guess that I would think, right, okay, so all of these sellers here who were probably still in the market, you know, we close through this high, we close through that high, we're above balance, and I think we're going to go, and I can have a really tight stop if we are. That means I'm going to make decent art. So, but what ended up happening is the people who were playing for the reversal yesterday, they got paid. And then the people that were playing for the reversal yesterday, this side, when I thought we were going to go, got paid. And the expansion guys, we didn't get paid. Does that mean that we need to all start being reversal traders and change our trading strategy? No, it doesn't. It just means that yesterday they got paid and we didn't. So I will say this though, right? You will come across more win rate with trading a reversal strategy. It's easier to do. It's just a lot harder to get an edge doing it. So I've looked at trading reversal strategies a lot of the time. The market reverses and stays in balance more days than it expands. So trading a breakout of balance strategy is tougher than trading a reversal of balance type strategy. Definitely. Why? Because obviously for long periods of time you can be sat doing nothing as a breakout trader because it's just not happening. And then obviously, you know, you might have a losing day like I did yesterday. Now I might not see another setup now for 2 or 3 days. Whereas you can bet your bottom dollar that the reversal traders have probably already had a trade this morning, haven't they, off this point? I just find it suits my personality more to be more of the breakout type trader, expansion day type. Yeah, I always wait for the candle close. Why do I always wait for candle close? Right, James, because I know for a fact on a 5-minute time frame, the DAX is such a slippery little snake that you can see what's going to happen. Because I've spent a lot of time on the shorter time frames, you can sort of see at 4 minutes 30 seconds what the algos are trying to do. So they'll make it look like they're not trying to do something for 4 minutes 30, 4 minutes 45 seconds. And then at that particular point in time, just before the 5-minute close, they leave you high and dry if you're eager and you're on a 5-minute time frame, or maybe a 10-minute time frame, or a 15-minute time frame. And this is why you get so many moves that happen at 8:45, 8:30, 9 o'clock, and it's because they've trapped people just before that point, and then they move away from them and leave them high and dry. So I'm always very careful about waiting for the candle close, always, because of that reason. Because if you're not, it's highly likely that you can get trapped. That's another point to why I use time-based candles rather than anything else. You should always have the time up. If you're not trading time-based candles, you should always have the time up to candle close, I think, because it's important. Because traps tend to happen just before your 5, 10, 15 minute, 30-minute candle close. Hey, up Nikos is in. Market trade ranges a lot more than a breakout. I agree, Mikos, they do. It's probably why you're a lot richer than me. Is it? It could be. If I'm being honest. My bro science stats say about 80% of the market is in a range, 20% trend. I do agree with you. It's having the discipline, though, to spot the right breakouts. It probably is the toughest gig in trading, the way that I trade. I'm not going to deny it's not like it's tough, because a lot of the times you'll be wrong, but when you're right on a breakout, if you can hold and not scalp yourself out too soon, which is what I did earlier in September when I shouldn't have done, you will make way more than you'll make way more in one day when the market really goes. And from what I've seen, then you will trade in 10 breakout strategies. So range reversal strategies. From what I've seen, don't quote me on that, but it's a lot more difficult to do, because obviously you're just waiting for that one big fish on you, that one big great white or month, or maybe you only get to a month. So it's a lot more tough. As I've said, the win rate's nowhere near as good, but the actual overall winnings of the strategy, the money made at the end of it, is probably higher, I think, if you can trade it properly. He's not richer than me, he says. I don't believe him. I definitely don't believe him. I don't believe you. You can say what you want, but I don't believe you. And he says he's trading for a living, he won't be rich, but this guy loves trading. He loves it. He lives for it. He absolutely loves it. So he'll still be trading when he's 65, and even if he's a billionaire, he'll still be pressing buy and sell, I think, Mikos. Don't kid yourself, brother. Right, so if we get a close below 15,007 now, you could enter with stops above 68, but 60 point stop. Yeah, there's a few things putting me off this one. It's Tuesday. I tend to lose money on a Tuesday. There's nothing that would strike me as being a decent entry for me yet. I know what you're saying. Now the risk reward has slightly gone lower, and a close through there, maybe. I think this is more likely to chop around though, Nick. We'll have to see what happens, obviously, and trade what we see. Trade what's in front of us, as Mikos would say. We love that one. But I would think that this is going to hold now. I'm sorry to sort of like give you my sort of bias, because we should have no bias, but I would think that this balance area is going to hold, and this is going to chop around for the rest of the day. I would suggest that this low here could hold now. Now, it might not do, so don't trade off it, but to me that looks like a low's been set there. And we could push up, and we're probably going to take these stops and these stops. Push up to the higher balance. I hope that I'm wrong though, because I think Liam's short. I hope he gets paid. But if not, Liam, it's just another trade. I lost 2 yesterday, pal, so don't worry about it. He's going to be trading when he's 65. I mean, gosh, you'll be trading when you're 65 anyway. I bet you. No matter how much money you've made, you'll still be having a cheeky look at GBP. Definitely. Yeah, so that I mean, that would convince me there that this low is in here, because we've tried to get pushed out a balance again, haven't we? And then we're back in. It's a choppy day though. It looks like it's your typical Tuesday. This is with the darks, where you get a balance inside balance. You're inside Monday's balance again. It's Tuesday. typical, made a low and we've reversed again. So this isn't there's nothing that screams my type of day type from this market now, guys. Nothing, absolutely nothing. Just being completely honest, like, does this look like it could potentially be an expansion day? That's the first thing that I ask myself on every type of entry. Does this look like this day type from the price action that you've seen from this point in time looks like it could be an expansion type of day? It definitely doesn't for me. Now yesterday, let's go back to yesterday with my shorts. I actually did think, looking at this, just get rid of these lines, I actually did think at this point here on this sequence that this could be an expansion to the downside. It did look like that. We had a very strong leg through and we sort of had this weak bounce. This bounce just looked really weak to me, and I actually thought that we were going to crack off. So that's the first thing that I look at in this area yesterday when people were saying, were you long, did you get long? It just didn't scream out to me as being an expansion type of move. I would much preferred it to see a bit more aggressive and some highs get taken out with solid closes above that high, like I said. So that's what I look at, really. You've just got to be honest with yourself. The first thing that you see in the morning with your entry is, does this look like it could crack off? And then is the stop acceptable to my risk reward profile? And then is the balance big and tight or tight? And if so, like, these are the things that I put into an entry. And you can still be wrong. Like yesterday I got stopped out twice. It sucks, but it's just the overall context of the day. You see, like, yeah, so that's what I was thinking, that them highs there were going to get taken, so we've just done that. So we've got to be careful now, guys. Nothing at all happening for me now. Absolutely zero. You holding any crypto at the moment? No, I'm not, Dave. No, sorry. I did have some at the start of it all, but none at the moment. Mikos, if you do a course, I will shove everybody your way. Mikos is a professional trader. So if you do one, I'll be in there myself, mate. I want to have a desk next door to you first, please. I don't mind paying for it as well, to be fair. I say, if you can walk the walk, I don't mind giving anybody a thumbs up for trading education. Mikos can, so that's it. Mark, do you have any rules regarding stop outs? Yes, so make sure your stop outs are always the proper risk that you've risked properly. 60 quid at the moment for me. You have to do that. You have to stick to your risk. So that's the number one with any stop. Your stop should always be in the number one with any stop is the actual risk of it, is how much you in for if you're wrong. That's the critical point to any stop. The second critical point to every stop is it has to be in a place where you know that you're wrong. I don't like putting stops in places where I could possibly still be right on a trade. So I will always put them behind a structural high or low and hide them behind there. Yesterday is one of them days where the high gets taken out and it looks like it's ready to puke then, and you get another drive lower, and I put my stop in another proper place. It was in the right point. The trade was right yesterday. The execution was spot on. Just got stopped out twice. How many losses can I take in a row? Two and I'm done. Very, very rarely. I think this year I've taken 3 stop outs twice. It tends to be, if I've not got it right twice, I'm normally definitely wrong, and the day type is wrong. I'm seeing something wrong. But I pressed it 3 times twice this year, I think, and been stopped out 3 times. One of them it ended up at scratch though. I pressed it 3 times and it ended up at scratch. It closed at 9 p.m. right on my third entry. But the other time I actually lost money and lost 3 times in a row. I was really disappointed with that, but it did give me a proper entry. Just lost 3 times in a row. But guess what? The next day I think I made 3.7R on the next day, so I didn't feel too bad by the end of the next day. But I tend to just take 2 stop outs and that's it. You have to think, like, if you're trading a breakout strategy and you have 2 goes at it and you put your stop in the correct spot and the market stops you out, you have to think, like, this maybe just isn't right. maybe you're not seeing things correctly. There's something that's just not adding up. The price action of that day just isn't suiting what you're thinking is going to happen. So I think if anybody takes more than 2 stop outs consecutively, even if you day traded on a short time frame, you should probably get up and go and have a walk away, because I think if you take 2 straight away, definitely 3. You're just not quite seeing what's going on right. And you've got to protect your account, haven't you? Because basically, like 2 stop outs, 3 stop outs, it's, if you're at 2% risk per trade, which I aren't on my live account, you can soon be down pretty big numbers, really. You have to just be careful, because it can affect your psychology. Go for a walk. Go and clear your head. 10-15 minutes, that's all it takes. Go for a quick run. Go and do something different. Get yourself off the computer. The worst thing you can do is sit there and try and trade yourself out of it with the same mindset where you've been stopped out. Especially if you're feeling a little bit like you're not quite with it. You don't know what's going on. You don't know why you're losing, which can happen. Now, a lot of professionals will just carry on pressing the mouse, won't they? And they're cool with it, but I'm just talking about for anybody that sort of feels like after 2 stop outs, psychology, mentally, they're feeling like, Jesus Christ, what's happened? If you're a professional and you're trading, a specific strategy, and you know that them loss sequences can happen, and it's just part of being a day trader, then crack on. But for me, 2 losses with my strategy, I have to just be aware of what the hell's going on with the market. I've had 6 losses in a row change this year. 6, one after the other. That's happened, just to make everybody aware. So 6. 1, 2, 3, 4, 5, 6, all losses. Now, I'm trading 2% risk on this. That'd be 12% down. It happened in August, that did. I think off the top of my head. Did I have them in August? I think March was pretty bad as well for a losing streak. But that happened in August. It sucked. But then again, right, I think I had 6 losers in a row, and I had one day which was a 4.5-hour winner, and then the next day was around a 2-hour winner. So this is how it goes. Like, you just don't know what's coming your way. But I did have 6 in a row. 6 in a row. So that sucked. But it's one of them. You take them steps backwards, and you hope that you can, jump on the ones that take you forward again. I'm quite happy with the fact of losing 1 or 2% on a trade, because I know that if I get onto a breakout, that they're easily paid back. You could have like 10 in a row, couldn't you? And you get one decent breakout, and it's going to pay for a good portion of them losses. You just got to keep doing the right thing and keep executing properly and not worry about it really. It's difficult though. You do worry about losing money. It sucks. Nobody likes doing it, but I'm short US dollar CAD. Entry is closed on 1 hour bearish candle. Traders daily 1 lows and a retest. Lovely, Kurt. Mikos has got the same position on you, so you're in good company. What's the most winners in a row for me, Dave? Not very many. Probably 3. 3 or 4 this year, I think I've had in a row. It doesn't tend to happen like that. I think 3. 3 and then a small 4 winner. You don't get many big breakout trades like that in a row. It doesn't seem to happen. You might get a Friday and a Monday that go, and then the Tuesday dries up, or you might get a Thursday and a Friday that go, and then by the Monday it's all settled down again, and then the Monday just dries up. The volatility does. It's very, very. I mean, in the Corona times, with March 2020, there was really good days after it. Like 1, 2, 3, 4, 5, 6. But that was 2020. But this year, I think 3 in a row. It's how the markets go, isn't it? They don't just keep expanding. It's very, very, unrealistic to think that would be the case. Now, could it happen? Could we get a month where the market just goes straight lining? Definitely, but you can look up a monthly chart, and it doesn't really happen like that. You sort of dive, consolidate, dive, consolidate, dive, consolidate, or up, consolidate, up. So these consolidations is where my strategy tends to either not get an entry or lose money. have a look at US dollar CAD, see what these guys are doing. And then I'm going to get off, guys. Oh, it's coming off. Right, daily. Right. Nice looking setup. You know what, right, guys? Look at that for a fractal. Isn't that just like that DAX we had earlier on the 1 minute time frame? Now I know you might think no, it's definitely not, but it just strikes out as me as being that leg up there is so weak. That leg up is such a weak leg. It's the same as what we just saw on the DAX. Let me just go back and show you that leg. It's just a leg in price. I find them very interesting. Let's go to the 1 minute. Like we were thinking, you've got these lows here, this low here, you get this drive down, then this weak leg up, and then you get that pin bar, which I was saying that would be a nice short, and then obviously you get the rotation lower. But this obviously got pushed up and got stopped out. But isn't it strange how that it just looks so fractally on the 1 hour to that card? Can you see what I mean? You've got these lows here, these lows here, these lows here. You get this move down, which looks, you know, the volatility. You know, you can see that someone's selling it. Volatility picks up as you go through the low, and then you get this sort of weak rotational leg back up, followed by pins and is that a bearish engulfing, would you say? I don't think it is it? But it just looks very similar to that DAX. I don't know if you can see that, or if I'm just seeing things. This point here. So let's get rid of that because we wouldn't have seen that. But you've got like lows, 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 drive through, and then you get this rotation back up with the pin. Just looks so similar, this rotational leg back up does. Yeah, see you, Dave. Have a good day, mate. Take care. March is the most bullish month of the year. October is usually a decent month for volatility. It has been, hasn't it? Well, I'm thinking of September there, Miko. Sorry. September was good. The end of September was good. Hopefully it will be. It just looks like it's drying up though to me now, Mikos, this DAX does. I don't like this. It looks like somebody's stepped in and tried to sort of like save us, for me. Don't want to sound like a conspiracy nut again, but it just does. It just, you know, like, I would just prefer to just see this low get taken. It'd just be amazing if we did, if we took this low. But we're underneath this low here still. And you can see, like, just go. Just go. Just get on with it and go. But looking at that there, I would think that I would think that if they don't save it here in this sort of scoop up, they've got problems, because if we've been down there once, twice, 3 times, 4 times, and they don't manage to get a close above this high here and sort of get a breakout of it, we could end up just rolling over the next time we go down there, because I always think like the more times something's tested, the more probability it's got of actually breaking and going down there. But it just looks like they've just dried up. They've just dried it up. I see this so many times with the DAX, and you break a low and it just dries up. And it's like the ECB are in here just buying. Somebody's just buying. They just try and just do enough just to keep it up, just to put anybody who's selling it off, just to take the pressure off the market. And you go through a low and the volatility just dries up. It's like it's not what you want to see if you're thinking it's going to expand to the downside. Bisha, hi Mark, hope all as well. Did my arse yesterday, lol, we go again. So did I, mate. You're in good company because I did too. Mikos is short from 12609. All the details of why I took the position will be in my course. Here we go. We've got another trade educator in here, chaps. it mostly goes to volume block where there is a reversal and then gets sold brought. So I see when it going up or down on low vol, you need to sell the volume block level. Somebody does. It's tricky, the DAX is. Shorts don't ever seem to pay. It's just so tricky. It just is really tricky. They've definitely got a mandate, the central banks have, to keep the market up. And if you're a central bank, right, you are looking at buying these lows here. If you're the ECB and you've got a mandate to keep this market up, keep the patient going, keep the, the stimulus in his bloodstream, keep him alive, you're not going to buy the highs. You're going to buy these lows, these major structural lows here. So you've got to know who you're trying to fight against down here. Can we crack off and go lower? Yes, definitely can. But the probability of that happening, and you have to be aware of like where you're trying to short. Like me yesterday, I'm getting short right into these levels here. Was that stupid of me? It probably was, really, thinking about the overall bigger probability of us actually shitting the bed. You want to believe that we have free markets, but I don't think we have. And I think that this is what they do. They wait for these structural lows to get broken, and then they just buy, and they just pin us up, and then they leave the rest of it to the normal market. And a lot of the time we rotate back down again and break a low, and they're there again, pinning us up. So would it surprise me if we just went back up and pinned up into 15.6? Definitely not. I think that's way highly more probable than us cracking off beneath this low here. Would I love it if we cracked off beneath this low? Yes, I would absolutely love it, because that's going to bring us more volatility, which would be good, so we can all make some money. But I would have to say that if I was a gambling man, I would think that by pressing short in these areas here, you're going to feel the wrath of whoever's been buying the market and trying to keep it up. Because as you're pressing short, they're going to be pressing buy. I reckon they have a perpetual money strap, buying call options and forcing market makers to do the underlying buying. There's something going on. Like Aaron, I don't know how, educated you are of all that side of the market, the plumbing side of it. There's definitely something going on. I wouldn't say that I'm highly educated in that aspect of it, the real plumbing of the market. I know Mikos is. But I think there's things that they can do that will just obviously... They seem to just do it at the right time. And you can say, oh, well, we're into support, so it's the buyers coming into the market. Yeah, but it just doesn't feel like that. It feels like there's like when I can feel it on the tape, it feels like there's like a hidden hand just making sure. You can feel it when you're short. It's there. And then what happens is anybody that's really wanting to sell the market, they back off because they can see it, they can feel it, they can feel it on the tape. They kill the volatility as you go through the low. They kill it, and then they just hold it there, and they hold you, and then they make sure that by the end of the day, you're underwater, and then you've got to get out your position, and the market chases higher again. But there's definitely something going on, and you know who you're up against because they've told you. Like the central banks have told everybody that they want the markets to be higher. It's part of their mandate. They've told you that. So it's not like we're thinking, oh, well, they wouldn't be doing it. Because look what the BOJ do, the BOJ. So it's not beyond the realms of possibility that it could be happening. Equities will generally always have more buyers. Pension funds need to buy loads every month. So that's who you're battling against, isn't it? QE is also propping things up. Exactly, Aaron. So that's a good point, Aaron, right? You make the good point there. Do you do what Northman Trader does and just scream that there's a crash and it's all should be at zero? Or do you come up with some strategy and try and jump on the central bank liquidity train yourself and make a strategy up of it where, rather like me now, right? Rather than pressing short as you're into these major structural lows, I could have saved myself 2R yesterday, couldn't I? Just by weighing up the probabilities, because I'm sitting here this morning, this is how stupid I am, I'm sitting here this morning and telling you guys that I don't think the probability is there that we crack off beneath them lows because the central banks are buying. But look where I'm shorting the market yesterday, right into their area. So like for me, that's something that I can take into account. Like, yes, you're trading a mechanical strategy, But if you're pressing short into an area where you know for a fact that it's highly probable that central banks or Deutsche Bank or whoever it is are going to step in and try and hold the market, like, you're an idiot for pressing short yesterday, Mark. Like, what are you doing? Like, so that's something that maybe we can all take into account. Like, me especially, I lost 2 trades yesterday right into their area. Like, what an idiot I am. I should have been buying there, right? Just buy the dips forever in equities, exactly. So maybe that's something that I can take into account with my own trading. If you're into massive structural lows, the probabilities of you cracking a short off beneath balance might not be there. Should I start taking that into account? Maybe I should. The problem will be is the day that I don't take it because I think that level's going to hold, the market will absolutely shit itself. And it'll be like 2,000 points down. Yeah, me too. I had one of my best days in 2020 being short, Mikos. I was short on that Corona day when we shit the bed. Scalped out of it a little bit too early, if I'm being honest with you. A little bit too early. Took some scalps, but it was a really good day. Yeah, so he makes a great point again there. So he's saying that he's made loads of money being short the indices, right? But then he's also saying that he would have made loads more, had he just been a dip buyer. And this is it, isn't it? Sometimes you can do the hard yards and not come out with just doing the easy trade, which is look at the market every time it seems to go down. We just seem to go back up. Without sounding like I'm an idiot, we do. So if you're pressing short in here, or you've been short, or you're trying to press short, is it more probable that you might just make more money if you just press long? I don't know. But it's so difficult to change your bias. You had a load of puts and went all in 2020. Buy low and sell high. Yeah, exactly. You have got to be careful pressing short into major structural levels in the indices, haven't you? You have. But it does look, I would suggest on my shorter time frame that we've had so many tests of this low now. Look at it. 1, 2, 3, 4, 5 tests. 5 tests. And it's still held. I don't know if it can take a 6th test. I don't know. I would think that the probability, if this low here gets taken out, 15,008 that we've made this morning, and we come back down there and take that low out, I would suggest that these lows here, this is going to really crack off. Because I've seen some stick saves, but this is just getting ridiculous now. You can see what's happening, can't you? It doesn't take somebody that's got a degree in technical analysis to see what's happening. They're trying to save this low. Somebody is. This needs to be worked out before we're going to get any expansion. I would suggest that if you drew a range in here over this high, and we drew a range in through this low here at that point, and trading an expansion system, you say, right, I'm just going to wait, I'm going to keep out of this until we see a break of one way or the other, and I'm just going to keep out of it because this could just go up, it could come back in, it could go under, it could come back in. You want to get a bit of distance and a decent couple of candle closes out of this box one way or the other before you're trying to trade any expansion of it, because I think probable that we take that high and then roll back over, and I think it's probable that we could probably take this low here very slightly and pin and roll back into it, because there's a little bit of a battle going on there, isn't there? You can see. Breakout trades are great in the 90s and early 2000s. I had a pal that ran a fund that was specifically breakout orientated. They made loads. They wound the fund down in 2015 as breakouts were not. Right, maybe they weren't picking that. I don't know. I think breakouts still happen. Mikos, 2015 was a rough year though. I'll say that for breakout strategy. It was a bad one. If you remember, I think they killed the volatility, didn't they, going into President Trump? Sort of. It was like the last year of Obama, was it? And I think Trump come in 2016, didn't he? And once Trump come in, the volatility just went ping. You know, we had that massive trade down overnight through his election night where everybody thought the high's in, it's done, the market's over. And then Trump got voted in and did that speech, and it just ramped up. And it never stopped all year. But I think that tends to be what happens though, doesn't it? Like they probably wound that up in 2015 on the worst possible year. And then if they've looked at 2016, 17, 18, 19, 20, 21, I bet their strategy would be profitable now. It's what tends to happen. Just at the exact point that you think that that's done, this isn't working anymore, and winding it down. A lot of the time, right after that point is the you know the structural change in markets that brings the volatility that you need. Brexit and Trump saved his trading career. Right, exactly. Yeah, for me, I saw that. I know that 2015 was a rough one. It was a rough one on my strategy. 2015 was. The market wasn't going anywhere. It was very similar to how we are now, though, Mikos, in structure. 2015 was. If you look at this big... let's just get rid of everything. Let me just show you what I mean. Let's get onto a bigger chart as well. 2015 was very similar to this. What do I mean by that, right? So, if you look at this, I just call this like a big distribution. It's just... there's just nothing happening. As a day trader in this environment from this point here, you know, we're doing nothing. Very sort of choppy, no directional to it at all. There's nothing really there. There's no trend there, is there? You could say there's no trend there. It's just basically one big mess. But if you go to 2015, I remember 2015 being exactly the same. Just get out of it. Let me do this now. 2015. Let's go to October 2015. Get it up on the daily. Yeah, so I'm looking at 2015. I suppose there was a bit of a trend here, but this point here I'm talking about. Why did Trump get made president now? It's the end of 2016. No, maybe I'm wrong. Was it 2014? Yeah, sorry, I'm thinking 2014. This bit here in 2014 for me. Can you see how there's just no direction at all? And we're just sort of... it's the same again. The lows get saved. If you look at them structural lows there to the market, stick save. Then we get beneath them and everybody thinks it's going to shit the bed, and we get straight back above it. It's a stick save again, and we're off to the races. Sorry, so 2014 I'm thinking of. But look at that for an undirectional market for the year. Look at that. There's just nothing. The whole year, totally shit. No trend, no nothing. And the market spent the whole year like that, by the way. Like a full year. So it can happen, and that I remember that being a really shit year for my strategy. It was 2014, sorry. But I think that's Trump, isn't it? There, that's the Trump ramp there from that point. Yeah. So in 2016, that's the night of the election. I'm sure it is. That is there. I am positive it is actually. The 9th of November 2016. We had this massive move down, which at the time, I think it was about 1,600 points or something like that. I got long in here. And as I said, I wished I would have just held because we've never seen them prices since. I think they got did they get retested? No, I don't think they did. Yes, they did. Yeah, there. But I got long in this point on this candle. I brought that Trump dip on the night of his election. As I've said, I had a good day, a very good day. I should have just held. I remember thinking, is this just steamed up? Why the hell did I not just hold everything? So yeah, you know, like looking at this year here, 2021, could it be like 2014? Just a year of nothingness? Shit year, definitely. Could be, but as it happens, I haven't done too bad. He would probably be a trade educator now if it wasn't for Brexit and Trump. Right, so he traded breakout with FX then. Right. See, I find FX to be really tricky, Mikos, to trade breakouts with. I find them to be even more tricky than DAX. I've looked at how my strategy would work on FX, and I don't know if I could trade a breakout strategy on FX. Same as saying there's certain day types, but they are so few and far between. The IB does work with GBP though, 7 a.m. to 8 a.m. trade block, but for me it just doesn't suit how I trade. You can use it to give you a very good bias with GBP, the 7 a.m. to 8 a.m. trade block. Stopped trading the DAX about a year ago, and I looked at the weeklies and realised it was about 8 dojis in a row. Yeah, it's same as say it has been a tough year this year as on the DAX. Same as say, look at that there, look at that. This is what we've had since April. It's been tough. It really has. The big days are few and far between, and you seem to get these explosions in volatility, and then it just dries up. You know, like big down day, straight back up. Big down day, straight back up. Big down day, straight back up. So, and then that's what tends to happen with my strategy. You'll get like a big day, and then it'll just dry up again, and you'll just get these choppy up days. Big down day, chop, 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 big down day, and then another big down day, and then just basically straight back up again. It's not giving anybody who's selling the market time to get a position on and keep in a position. It squeezes you out. And then you go back up through the highs again though, and then it dries up again, and you have another rollover, and you think it's going to go, and so it's both sides really are finding it very, very difficult to stay in a position. It's tough. Tough, really is. It lacks direction. Yeah, I suppose that's a big thing, isn't it, Mikos? When you is obviously smaller amounts than at the fund. So I suppose when he's trying to get into the market or get out of the market with big sizes, he's got to, is the liquidity there for him to get in and out of the market on a breakout? Because a lot of the time it's not. You don't get filled up for what you need or for what you've back tested for with big amounts of capital. Because there's liquidity in there, is it? Especially if he's trading a breakout type strategy. I've seen the order book and the DOMs and stuff when you're breaking out an FX, and it just isn't there. So I would imagine that's really tough, to be fair, to even get what he needs to get on as a position if he's trading for a big fund and he's got big amounts. Yeah, exactly. So I'm seeing that, Mikos. Central banks do. They try. That's exactly how I see it. They just try and kill the volatility at certain points. They tend to try and do it with a gap up as well, overnight ramp. And then they'll just camp it. So you get the big down day, and the next morning you'll wake up and it'll be up 150. But they'll never let you get back on side. If you're short, like they never bring it back. Like they kill the volatility, they make the balance nice and big, they kill it, and then they just chop it all day, and they don't let shorts get any rhythm back again. Similar to what's happening this morning, by the way, I would suggest. Very similar playbook. Look at that. Volatility's just been killed. Taken out and shot. Looking at this here, right, you wouldn't think that we were near a huge structural low, would you? These are the points that I take into account when I'm trading, like what I'm seeing. If you're trading and you're not seeing this, if you're into this big low here, the market's normally volatile. This is a major structural low. Major, right? Huge. You've got structural lows here, major swing points on the daily, right? Major swing points. Now, you open up and you get this on the initial balance on a Tuesday morning. This shit. It doesn't seem right. There's got to be volatility. Normally, if you're near these lows like this, and the volatility would be so much higher, you'd be either going down or you'd be breaking out. And this is what they do. The volatility just isn't there. They've killed it. And this is what happens, guys. This is how they trade, basically. I'm sure they do. I'm sure they come up with advanced strategy to sort of kill the volatility in it. The markets, not free markets, normally wouldn't trade like this into major lows. Do you understand what I mean by that? They just don't trade like that. As you approach major swing points, the volatility, especially as you approach them, like sort of from like a bearish perspective, the volatility normally explodes. And even the breakouts back up away from the levels tend to be huge. They tend to just run. But you can see what's happened. They've just killed it completely. The market doesn't, from in my experience of the last 11 years, as the market does this, it doesn't normally happen like this. As you approach these lows here, the volatility normally picks up. The swings away from it are erratic. They're highly volatile. Even to the upside, they tend to be big swings. You can very normally get like good risk reward on, and the market, when it breaks out and goes, it will just go. And you just get this complete chop fest where you know what's going on. They're just trying to kill it. They're trying to kill any bearish prospects. But you know what will happen? We'll break out of there later on and it probably won't go and it'll roll back in again. It's a tough one, but you have to sort of... this is the game that we're in. This is the game that we're all playing. Look at that. Look at that on a 4-hour time frame. And tell me that is not manufactured, that price action. Look at it. Look how tight it is. Look how they've just taken all the volatility out of it at this moment in time. There's nothing going on. I would suggest that after we've been through this low here once, twice, 3 times, 4 times, 5 times, we should have cracked that low. It's obviously being protected. For me. It's Christian Lagarde. She's got her high heels on. She's in the market, boys. They're just getting the inverse head and shoulders team called up. Let's see what Migos has picked. Slow grind upwards incoming. Probably, Thomas. Yeah, probably. That's the playbook. Grind it up. Spank everybody that's been getting short. And then what happens is all the shorts get out of their positions and push the market higher. Because they know that they can see what's happening. Can everybody read Mikos's point in the chat, guys? I won't read it out because obviously you don't want me reading stuff out of my Stokey accent all the time, but he makes some fantastic points. Have a read of it. It's interesting points he's making. The largest up days are in bear markets for it. It's a good point you make, dude. It's a good point. But would you say we're in a bear market yet, Wulang? Looking at that, is that a bear market to you? For me, I don't think it is. I don't think that warrants being called a bear market yet. It looks horrendous. Don't get me wrong. If you're looking at that on the daily, there, it looks like a pile of shit. It really does. But it doesn't just seem like a bear market to me yet. The reason that I would like to see this low here go. This low. This one is key to me. That is such a huge level. This. If that goes and we get a close through there, you can only really be thinking it's going to crack off. That there to me is the key. The floor of the market, which you can see that's what they're trying to save at the moment. So for me, that's how I would be looking at it on the dailies, guys. From a purely technical perspective, that's the floor. If that floor gets taken out, this thing is going to unwind big time, I would suggest. And as you can see, they are trying to save that. That's the key level there for me. They're trying to save that. They know that if we get beneath there, we could potentially unwind. So they're trying to keep us from getting beneath there. and get into that point, because it would be far cheaper for them to keep the market here and hold it here at this point than it will be to try and, roll up all that liquidity and all the unwind. If we get beneath it and unwind, it will be way cheaper, I imagine, from a financial perspective. That's how I see it. I hope we break it though. I really do. I hope we do. Just so that we can see a proper market again. Like, I really do hope that we break that low. And I'm not trying to I'm like a doomsday person who's like bearish or anything, but just from a perspective of an open and free market, I would love to see us crack that low off. Just so we can see what the price action's like underneath there. The worst thing in the world for me is if we go back into this range and we go and do this again all year till Christmas. That would be so shit. It would be unbelievable. I'll still try and trade it, but for me, I would just love to just have a free market, get beneath 15,000, get a daily close beneath there, taking out this low, and let's just see what a free market looks like. We might not completely shit the bed. We could very well go like take these lows out here and then pin back into it again. But it would just mean like we've actually been able to just have a look at, see what the plumbing is like beneath this floor. Let's just have a look at it. I'm curious to see what the market will act like down there. If you're reading, guys, read Mikos's points. He's making some very good points in here. Who knows, Aaron? That's the key question, isn't it? I'm not going to lie to you, though. The daily looks like absolute... It looks so bad. I don't know if that's savable when you're looking at it. Can they save it? Yes, they definitely can. But look at that. Like, that's... I don't know about you guys, but it looks like death, that does. It's one of the ugliest charts I've seen for a good while. Just let it go, man. Let it go. Let the thing go. It needs to just go and unwind and then reset again. I don't know why they're so afraid about that, though. It's obviously because once it gets past a certain point, I think the stock market's looked as in affects the greater economy, doesn't it? For confidence and stuff like that, maybe. But it looks horrendous. We just need that close through. I'm sure we do. That's it. Will they let that happen, though? I don't know. We need that close through that level. It is such a key level, that is 15,045 on the cash chart, guys. That is the key number. So I would suggest that it's 15k, right? Because a lot of the time, let's just say it's 15k. If you're 45 ticks above 15k, right? 15k is the number that's trying to keep it above. So we'll say that 15k is the key level to this market. So let's just move it down to 15k and say that is the key to the DAX. It's a huge number as well, isn't it? And I do think that big numbers like that, you've got your... Yeah, so let's just say it's 15k. The daily close for 15k. As you can see, every single one of these stabs below 15k since April. We've had one straight away. The next day, boom, straight back up. Since then, every move through 15k, every single one. You got 1, 2, 3, 4. Nearly did it there. 5. We've had 5 moves through 15k, which have all been saved. So you could technically say that although that is the level, the key level in the market, it's probably going to be like 15k, which to try and save. So everybody should have that on the charts, on the DAX, on the daily. If you're looking at the DAX, I would suggest 15k is the key. One decent lower low on the daily and it's hasta la vista, baby. I agree. I hope it happens as well. I really do. It'd be good. The volatility would be crazy. It'd be interesting. The monthly SPX was a big bearish engulfing. Technically, risk looks bad. I've seen that, Mikos. I've seen that. Do you want me to tell you who was pointing that out this month? Sven. Good old Sven was on. Northman Trader was on, pointing it up. It does look horrendous, doesn't it, that? It looks awful, that big monthly bearish engulfing there. But I also think that this here looked awful at the time it happened. I remember thinking to myself on the monthly there, Jesus Christ, this looks dreadful. I might have even tweeted it out, to be fair. This monthly sort of hammer. I would suggest that looks dreadful. It really does look awful. Hey, oh, what's this little trend line doing in there? Let me take it out. That looks awful as well, doesn't it? You would argue that that's a top. That is a top. It looks like a top to me. In any stock charts for dummies stuff I've ever read, this is a top. But that looked like a top here. Look at this point here. Let me get rid of all of that. Look at that there, right? Would you say that that's a top? How we rolled over there? I would have thought we had done this point. But look what happened. Just steamrolled higher again. So I'm not saying I will be, I'm just pointing out that this looks horrendous. But we've looked horrendous previously as well. And it's not meant nothing really. This is how the market set you up though, isn't it? All these perma bulls will get wiped out eventually. Because they just think the market always goes up. But they don't, do they? We know that markets don't go up forever. We do look massively stretched here. Huge. But I was in Sven's room, I was in 2014, right? And the guy was calling the top down here. 2014. He was. I remember being on a cruise, right? I was not on a proper cruise. I was on a 3-day cruise in France. Me and my missus went on a 3-day cruise, and I just joined his room, and I was a really sort of green trader at that point. I think I'd started in about 2010, 2011. Well, the first 2 years, I didn't even know what I was fucking talking about or even looking at. But I joined Sven's room, and I thought he knew what he was talking about. And I was on this cruise, and I remember getting short on this cruise. I was on this cruise and I was like, right, Sven says the top's in. This thing's going to roll over. And I think it must have been 2014. It was. I'm sure it was. Let's just have a look where he would have been. Yeah, you know what? It was. I'm sure it was October. It was. I remember. It was October, definitely. It was this month. We'd had a big down month and Sven was like, the top's in. In this candle here. I think we'd got a short on. It was like, I think we'd gone through 2000 and he'd got a short and he thought the top was in. And by the time I'd got on the cruise and put my short position in, I was like really, really up, and he was like, yes, the top's in, this market's rolling over. We'd hit some magic fib level off this high and this low. The top's in, he's calling the top, the end of the economy, the American economy. There was something that had happened, it was the end of it, done. By the time I'd got off the boat, I'd done my arse and ended up losing a load of money. Because I had no internet signal on the boat, by the way. There was no Wi-Fi signal. So I'd entered this position. It was like I was only on it for 3 days. And I got on and thought, yeah, this is great. I got off and I'd been stopped out. But he was calling for the top here, this guy was. It's just lunacy. But this is the guy that I followed, and I was paying him, I think it was $60, $70 a month for that information. Now I would suggest that this looks different. Potentially it does. One, we're so stretched it's unbelievable. 2, we've got a huge monthly bearish engulfing. And 3, the dailies look dreadful. But you build the case. Has it paid to not buy these types of lows in the past? No, it hasn't. And this is the thing, you get rewarded sometimes for doing the dumbest thing. Just don't think, maybe just buy, close your eyes and buy, and you probably make money, I don't know. I would short the DAX, I would, if we break that low. It wouldn't bother me shorting once this low is broken. I just think you've got to be careful trying to get short in here now. I think last night was key. I think if we were going to go last night, we would have gone. We would have broken that level overnight maybe, and we would have gone. Waking up this morning, it's still not gone. We had the chance to roll over yesterday, and it didn't happen. and break the level, and we just didn't. I just felt like we were being howled. So that's it, guys. Have a look through the chat, right? Mikos has made some great points to everybody this morning. Thank you very much for all coming in. I'm going to get off though because I've got a few things that I've got to do this morning. I will have my alerts in for when this thing breaks the top of its IB, which is it that point there? Yeah. Which it looks like it could do. We look like we've had a good run into this IB high here. Okay. I would be surprised if we didn't get some sort of trap going through there first of all, so just be careful. Could it steam straight through and go up 200 points? Yes, it could, but for me, probability-wise, this leg up here, I would be thinking that we're going to see somebody step in at this IB high here and just maybe create a bit of a, try and create a bit of a trap or reversal. So that's it for me, guys. Thank you for all stopping in. I'll be back tomorrow, hopefully with a higher account, but maybe lower. We'll have to see what happens. Is Joshua right? Is there a level you'd want to see Dow or ES break before shorting the DAX? Potentially now, buddy. Yeah, there's the floor in there now at 15.45. I think we need to crack those lows that I've been pointing out to everybody this morning before you'd want to get short. I would get short from higher up though. Hopefully, that might be a play. You know, if we can get back up here and take these lows here and fail, and then we get an opening range that opens up and we crack through and at the bottom of an opening range, and then we could potentially have a target here at these lows to have another proper crack at them. That could happen, but we'll just have to see how it all sets up. It will all make sense, guys. It will all make sense eventually. We just can't see into the future, can we? So just trade the setups that appear to you, and everything will make sense eventually. Don't try and second guess anything. If you get an entry short, take it. It might be the biggest trade of the year. If you get an entry long, take it. If it sets up right, take it. We're only trying to add context to like with discretion here. You've got to take what you see. Setting up, because who knows? This high here could get broken today, and we might go up 300 points today. So it's all discretionary, but if you get your setups, take them. Be a legend. Get the execution right. But take care, everyone. Thank you for stopping in. I will see you all tomorrow, hopefully. Have a good day, and I hope you all smash it. Take care.